Dow would be up, but for one stock. So a little bit of a weird
Not
bet.
even up like 700 points if it wasn't for United Health.
Really?
Yes. But let's bring that into
random but
discussion.
interesting.
Right, I know. It's RBI. For sure. Look at this. I know. Here, give me some of that.
All right. Hanging?
Anyway, so much with the volatility here, right? So there are so many things that investors are shifting gears towards, moving to, from growth, everything else to value. Our next guest says that many of his clients are not yet panicked about the wild swings on Wall Street because they have all gone back to the basics. And we're talking about dividend investing specifically when it comes to value. Joining us now is Matt Powers, managing partner at Powers Advisory Group. And Matt, this is a tale that a lot of folks like to hear. This getting paid to wait, getting some capital appreciation along the way. But even dividend stocks have been sold off in this recent melee. So why do investors turn back towards dividend-paying equities?
Yeah, thanks for having me, guys. Just kind of walking this back a little bit. You know, we've been discussing this for some time now on the network, the shift from growth to value, which feeds directly into dividend equities. And our conversation with clients, they really aren't panicked or anxious necessarily about the volatility. They're just looking to put sideline cash to work in this environment. But the challenge we all have is just uncertainties at a premium. I mean, things are changing by the hour. It's creating this untradeable short-term environment, but does create some opportunity. And it's really based around the unpredictable tariffs. I mean, dividend strategies, they're back on the radar really for two key reasons. So it's cash flow, like you said, while you wait out choppy markets, and defensive positioning without giving up potential appreciation. So looking at it, how do you place funds? And that's the conversation we're having. Is it ETFs, broad-based ETFs, or individual stocks? You know, with ETFs, you're getting, you know, they're easy, diversified, cost-effective, but they come with one major drawback. You're generally getting the whole sector, the good, the bad, the tariff exposed. And, you know, we believe it's a stock picker's market, so you can clearly be more selective with individual names within there.
All right, Matt, so let's talk about which names you are picking then, because you are a stock picker. So which ones are attractive? What parts of the market do you think are the better relative dividend payers, even if they're not the biggest dividend payers?
Yeah, you know, even though it's one of the more dividend-rich defensive sectors, you know, we like healthcare, but broad exposure to healthcare is no longer makes sense as a shield against volatility. You know, the recent pharma tariffs announced by Trump caught everybody off guard within the sector, so healthcare is exposed. But, I mean, this one's timely and polarizing today, but United Healthcare, right? It's the top headline, no doubt. Clearly a surprise, unexpected, pretty heavy earnings missed and reduced guidance. You know, in this aftermath, though, some positives and opportunities that we look for here. They're a dividend grower, and they have no tariff, pharma tariff exposure, and they do have some tailwinds, actually, from a policy and higher reimbursement payments for Medicare, which is almost doubling where they were. And a lot of the risk in UNH has been taken out today, and they have challenges that appear to be manageable. But we're not traders. We're investors. We're buying stocks to own, not to sell. So we're always looking at an entry point. We like it more today than we did yesterday with the pullback of shares off. I think they're off over 20% today. But to my point, UNH is the second largest weighting in the Dow. In most healthcare ETFs, it's the largest weighting. So if you're buying the ETF, you've got to pull back because of one company, along with the collateral damage of that managed care subsector. You know, and lastly, Elevance Health, Blue Cross Blue Shield, they actually pre-released details of its first quarter earnings ahead of schedule next week. I think it's April 22nd is earnings, and that they said it should come in above analysts' expectations, and they're reaffirming their financial guidance for the year.
All right, there it is. Matt Powers buying the dip in both Elevance and United Health, down 23%. We appreciate the time. Have a nice weekend, Matt. We'll see you soon.